I am here with Craig today from Equitas. Obviously, I'm Joe. I'm a business broker here in Nashville. I wanted to have Craig on here because, Craig, I want to have you on here because, buyers are looking for great businesses, not just a buyable one, right? Like you can buy any business, but it helps if your business is ready. And I think the services that you provide can really help someone go from a business for sale to a valuable, great business for sale, which makes a huge difference when you're trying to close a loan and transact $1 million+, right? So, Craig, please introduce yourself, your firm, and what you do.
Sure. Craig Cook, founder, CEO of Equitas Strategic Partners. We started a couple of years ago and focused, just as you said, Joe, on the financial statements. We provide Fortune 500 level accounting resources to our clients. And that could be just your standard bookkeeper, staff accountant. It could be the whole suite of the accounting department, which would include your controller, financial reporting, FP&A, CFO, even tax, and we even have a payroll solution. So we can really house and manage and oversee the entire accounting procedure map for a company or a nonprofit even as well. But you're exactly right.
Yeah,
Using those financial statements to make good decisions, and whether you are buying or selling, good financial statements will either save you money or make you money. They're not going to be detrimental to the process for sure if they're good and accurate and usable.
absolutely. And I wanted to point out that you said, Fortune 500 level financial statements, because I think there's a big kind of like dissonance for a lot of owners, right? Because on one hand, I'm a small business. I don't need Fortune 500 level work, right? And that'll be the mentality for years, decades even, until they go to sell. And then what I hear is, oh, well, Joe, any private equity firm, all these big corporations, they would love to have me. They would love to bolt me on, right? And it's like, well, you're talking with Fortune 500 experienced folks who are used to that kind of financials, and you can't sell at a Fortune 500 price premium if you're running small business, average, books. You can do that for a
Right.
while, but when you get ready to sell, it pays to have that, level of finesse. Mm.
Yeah. Like I
Yeah.
said,
So, I
it will
mean,
either earn you money or make you money. You won't lose money for sure.
right. Absolutely. I like to think of things in terms of, short and long term, right? Especially when it comes to sales. Because I either meet clients who, and I think there are business owners watching this right now, where they're like, I want to sell right away, or I'm thinking about selling. So, in the camp of, selling right away, that within 1 year time frame, what are things that you would recommend business owners do?
I think taking an honest look at your business's accounting structure, and that's from who's doing your bookkeeping. Is it you? Is it your wife? Is it Aunt Margaret? Is it a bookkeeping firm? Is it a firm like mine? Is it your CPA? And determining what's the best fit. Are your transactions being looked at on a regular basis? And by regular, I mean daily or weekly. Really no more than weekly. Should they not be reviewed and looked at and categorized? The next thing is just really, focusing in on making sure that everything is focused on the financial statements. So you're looking at accuracy, you're looking at timeliness. And again, this is a quick turnaround. So bringing someone in to just not really an audit. Most firms don't need an audit per se, like a public company would, but it helps to have a firm, whether it's a CPA firm or a firm like mine or somebody that just knows what the financials should look like, come in and just do a deep dive and look at the transactions, look at especially the balance sheet. The balance sheet is the biggest catch-all of mistakes. And then those mistakes add up very quickly. Whenever I go in and even when I was in corporate world and was asked to look at something, an acquisition maybe, or just a specific location or something that I was responsible for, that balance sheet for that specific entity, or the financial statements rather, balance sheet was where I started. That's where all the bodies are
Yeah.
buried. That's where you're going to find the biggest mistakes and the biggest write-offs. P&L resets itself every year. So you can hide some good things, bad things in there, but it's going to reset to zero every year. The balance sheet doesn't. The balance sheet continues on forever. It's that snapshot in time. So making sure you've got someone looking at that balance sheet and
Yeah.
making sure that it's as clean and up to date as it should be.
Yeah. How long would it take you to get a balance sheet in order. And I know a lot of owners using QuickBooks, whatever it is, the balance sheet is one of the first things to stop being accurate. How long does it take to get one from zero to hero?
Yeah, it depends really on how long the business has been going and the procedures that have taken place. But in general, you've done your tax returns. Maybe if we find something that's just horrendously bad, we need to restate, and amend your tax returns. But all in all, you're really only going to go back a year plus year to date. So at this point, we're looking at 15 months. And again, depending on the
Yeah.
complexity, depending on the number of bank accounts and credit card accounts and loans. And, we've got a client right now that has a significant number of note payables, none of which really were in good shape. So we had to kind of recreate the wheel for each and every one of those with an amortization schedule, make sure the amount that was on the balance sheet was tied to the amortization schedule for the month that we were looking at. So, it depends on the volume, but all in all, we can probably come in and clean up a balance sheet in anywhere from a couple weeks to 2 months, again, depending on the complexity and the number of accounts.
Yeah. Well, that's good. That's good because the reason why I asked is, and this is something I'm working on right now, is most buyers will take out a loan to buy a business. And what does the bank want to see? It's like they have to have it, probably two balance sheets, right? Because they want to see your payables and receivables snapshotted two different times. If you don't have a good balance sheet, or, you know, we need to bring Craig in to do it, great, right? But now we're in that it depends on how complicated it is to get that done. So a bank can then write a loan. And then if we discover it's not what we thought, all of a sudden, maybe we're not getting that loan anymore and that deal is falling apart, right? So
Yeah.
it's very important.
Yeah.
Um,
So, yeah. So we've
Anything
worked
else you
with
recommend
several.
that?
No, go ahead.
Oh no, please. I was just gonna ask, what else do you, if there's anything else you recommend in the short term, and then I can kind of like you can go through a little example of how your work kind of make a buyer feel really good about a profit and loss, which has not been the focus so far, but also a big component.
Sure. I mean, if it's a short term turnaround, just the deep dive executive summary on the financial statements, that's really going to be priority number one. There are some other things we can go in and look at your standard operating procedures, a month end checklist. That would be more if you're looking at a 3 to 5 year exit, where you can institute those, really sharpen them up and get a good long-term set of financial statements because you're basing it off of these procedures that we put in place that again are coming from Fortune 500 level companies that do this. They get audited every quarter, not just annually, but every quarter. Um, that are institute these safeguards, the segregation of duties and who's responsible for what, and making sure balance sheet accounts are looked at on a monthly or quarterly basis and all of those types of things. That would be more of a, like I said, a longer term runway. But, we could institute those as well. And if you're looking at a 12, 24 months, you'd have a good solid amount of time with significant changes to your financial statements that would be in a positive light, for that, 12, 18, 24 months as well.
Doing that even in the short term provides actionable insight. So you could do it in the short term, but I think it's still recommended long term, right? And I see that with businesses, I don't know, with lots of material costs, right? Are we getting outside
Mhm.
of tolerance? You don't want to find out at just the end of the quarter, end of the year, or when all of a sudden your bank account seems to be in a cash crunch, right? Like, can get that figured out ahead of time.
Getting eyes on it and someone who knows what they're looking at that can then relay that to management, um, is crucial in operating any business, whether you're a startup that's just starting to get revenue, or you're, a 150 million, $300 million X industry company that, having someone to be able to take the financial statements and let management know exactly what's going on and make them as transparent and usable, like I said earlier, for everyone involved, all the stakeholders, management, banks, CPAs, educated investors, board members, whoever's looking at it, they need to be able to see this is a good spot.
So looking at profit and loss, which is much more kind of common for business owner to be in, right? And we can kind of see where the buyer perspective of how important getting this cleaned up is just like, a mock-up of a typical small business P&L. Yeah, I often see just like labor as a line. Then I also often see like a negative number in cost of goods adjustment, which comes out to a buyer asking, why are they adding $18,000? Like, how have they made a material cost a profit center for them, right? Because again, COGS is you're not used to keeping track of it. It often leads to errors, just like in the balance sheet. Credit card often is just a line and gets scrutinized. Well, what do you use the credit card for? Is it supplies, auto, advertising, right? This just says you're missing 41
Mhm.
categorizations. And then meals and entertainment, travel, oftentimes are add backs in there, but we don't know how much. And then we got just owner draw in here in the P&L, which is not where it's supposed to be, right? So
Yeah.
all of this, you got a net income now of around $90,000. There's a lot of questions in here. It may look organized, but there's a lot of questions in here versus, and again, this is not the work that you've done, but I know that with a Fortune 500 kind of level of scrutiny, you get a little bit more detail. And then for me as a broker, this is great. And for a buyer, all of a sudden it's, I have I know what revenue streams I have. Now I know how much the business is driven by service versus product, what the labor costs are direct versus subcontractor. For add backs, especially for a small business, it's okay, these are business vehicles. I can add back the 10,000, whereas before that was a harder case to make. Again, add backs are clear
Mhm.
here. Like this is biz dev, this is meals with the wife where I mention the business we talk about it, right? And then all of a sudden it's owner salary, it's bought, we know what it is. And then all of a sudden we're looking at like a net income of $147,000 because we're putting things in the right places and we know how to like do the right add backs. So like a lot of times I think of things of
Yeah.
this is not inaccurate, right? There's nothing being like hidden here in a way, right? But this is confidence detracting and this is confidence building, right? Like that makes a big difference in the process. And like, I think this is sometimes lost on owners of, but I'm like, you should talk to Craig. It's like, well, I have books. I'm like, yeah, they don't look great.
Yeah.
But anyway, so
Well,
those are short
and
term things that Craig,
as business owners do,
um,
as I was just gonna say, a lot of times, you've got people in there who are doing the accounting who, no fault of their own, but that was a place they could save money early on. They felt like they were doing a good enough job, so the owner was doing it, the wife was doing it, family member, whoever, and so, it just compounds year after year after year of doing it the same way, thinking they're doing it right, and end up they're not. So being able to step up and say, "Yeah, I don't know what I'm doing. I don't like doing this. I want someone else to take a look at this and just, double check me and then potentially take it off my plate." Doing the things that you are proficient and passionate about. Those are the things business owners should focus on, not anything else, period. So, and most of them
yeah.
aren't proficient or passionate about accounting. So,
Exactly. Well, I find that they are quite passionate about it once it comes time to sell the business because then all of a sudden things are a certain way and we want to get it fixed and show how profitable and great we are. But what are things that owners can do longer term? So, say they're 3 to 5 years out, and I almost don't just mean you know, sale and transaction related, but I also feel like the work that you do, that fractional CFO work, sure helps cleans everything up and gets you more valuable for a sale. But I think there's just also just general business benefits of if I can get my KPIs on a page, I can just be a bigger, better business generally. So what are some of those things like farther out from a transaction that you can do?
yeah, absolutely. Coming in and doing these types of projects is part of what we do. It's actually in the last 6 to 8 months become a larger portion of what we do. Um, and just, having someone to come in, understand where you are in your management and your oversight of the company as an owner, and again understand I'm not passionate, I'm not proficient, and admit that, and then outsource those things. What was it somebody told me once? Those things you're not proficient or passionate about, delegate, automate, or eliminate. So find those things that you're not passionate and proficient at, do one of those things, That's where someone like Equitas can come in and take that off your plate and provide you with high level. We're probably going to do it quicker than you could do it. So that's going to save money off of what it would normally cost, just bringing in someone cold off the street. All of our team members are 10, 15 years of experience minimum. So you're dealing with people who've sat in these seats and done that work. So again, the procedures and the structure and the repetitiveness, they've done their whole career. So this is nothing for them to come in and put some good procedures together. As far as forward looking, cash flow forecasting is what I always recommend first. Getting a handle
Mm.
and being your own bank and stop being a bank for your vendors and your customers. That is huge. And just getting an understanding and taking control of what's going out and not being led by the nose because you feel like, oh, this has got to go out today. Understanding what's coming and where your expenses are on a daily or weekly basis is huge for a business owner. And I highly recommend whether we do it or someone else or you figure it out yourself, we're happy to help. But getting an understanding and control of that cash is priority 1A.
Yeah. I think if you're an owner and you've ever trying to move money around, like I think maybe a common example is if you've ever had a big payroll coming up and you've had to then move cash from other places to get it into your payroll account so it can go out, then I think that is like a blinking red light and siren to come to go call you. So that's avoidable, right? And but potentially like you miss a part of
Sure.
payroll, that's devastating for you and it's absolutely
No,
avoidable.
it's bad for culture. It's bad for budgeting. It's bad for the way it looks to a bank. I mean, it's several different layers, not just to the couple of employees that might have had a check bounce or something. Yeah, just getting control of that cash is number one. I've worked at places where, CFOs have lost their jobs because they didn't have control of the cash, and these were large international companies, and they don't take kindly to having to tap into a line of credit that's not necessary. Right. So just having, again, it's knowledge, it's taking the data that's in your system and using it to look forward. And that's what financial statements are for. You should be able to use your financial statements to then extrapolate out
Yeah.
forward-looking modeling. And if you don't have good financial statements at all, again, it all goes back to the financial statements. If they're not good, they're not transparent, usable, you're going to be stuck.
Yeah. The thing I run into with transactions all the time is, owner will often say, well, if they come down here and see what it's like, they'll get it. And sure, that may be the case, but if I'm a buyer and I'm trying to, do a $5 million, $10 million transaction, am I going to spend the time to go down there before or after looking at the financials, right? And it's always going to be like, look, just send me some
Right.
paperwork that I can look through to validate that what you, the broker, believe it or not, Craig, people don't think that I am the most trustworthy person in the world and they want to validate the things that I put in marketing material. So it is always the number one thing that I get asked is show me the financials. And if we're not showing really great, clean, clear financials right off the bat, and look, the business is what it is. If it's not great, right, you may not have been having your most profitable years. That's still okay. It's not going to kill the sale, but what will is if your financials look like a wreck and unreadable, maybe you are super profitable. That person is not going down to go see what's there if on paper it just
Yeah.
doesn't happen.
Or if they do go down and see it, they know they're going down to evaluate and try and get it on the cheap. So it's still costing you money, whether it may cost you the entire
Oh yeah,
sale or it may cost you multiples because they're coming in looking to get a steal because of poor
yeah,
bookkeeping, poor accounting. As I say, accounting will never cost you money. It will either make you money or keep you from losing money,
yeah,
but it will never cost you
yeah,
money.
yeah. And it seems like a negotiating tactic from the buyer, right? Of, oh, I'm going to go down there and drive the price down. But in a lot of ways, like they kind of have, you know, being like the seller over a barrel because if the financials aren't great, even if the business really is generating a lot of cash, even if you go down and see beautiful operations and just from what they see down on site, even if it's great, end of the day is that a bank is not going to write a loan, and that just eliminates a ton of capital that can be used to buy the business. And now your pool is just high cash buyers that just trust you. Like that's such a limited pool that they've got all the leverage in the world now because they know that they can't take what you have to go get funded by a bank. So they do have all that leverage all of a sudden, and it's been done
Yeah.
over time just by not having a
Yeah.
good accountant or CFO in there. You can help them
I
avoid that.
think there's probably a statistic. Exactly. Exactly. There's probably a statistic out there. I can't find it. I can't prove it, but even going back to the, 50% of all businesses fail in the first 2 years, or 90% of them do, or whatever that statistic is. There's a statistic in there somewhere that's going to tie back to poor accounting and financial reporting, and not knowing what the business is actually doing to understand what tweaks to make to keep it profitable, or to make it profitable, or to make it grow and scale. Again, all is coming back to the accounting and financial statement, and how they are put together, and how they look, and how usable they are.
It's a great one as we kind of wrap up. Let's see if you have any final words of wisdom to owners as they maybe think about a sale in the future, and then if you kind of recap a lot of the different services that your firm has and how to get a hold of you.
Sure. I think for business owners, I think just take a step back and look and see and be honest with yourself, and all of the structures within your company, from operations to marketing to HR to accounting to whatever the different silos within your company are. Just take an honest assessment of them all before you pull the trigger and put it on the market. Having the most And who knows, by then you may fall back in love with it and not want to sell. Sorry, Joe, not to take anything off of you, but I've seen that too. I've seen, they get to the day of signing and realize, I don't think I really want to do this quite yet. So I think taking an honest stock of your company in every aspect. And then if you are serious, making every effort to improve those over time. As far as Equitas, you can reach us through our website, Equitas, Equitas, SP.com, SP for Strategic Partners. My email address is Craig@EquitasSP.com. You can reach us. There's a Calendly link on there if you want to set up a meeting. My phone number is on there. It's my cell number, so feel free to call, text. I won't say anytime. My wife says not anytime, but you'll get a response for sure. But yeah, what we really again do is just wanting to help businesses and nonprofits get their financial statements in the best format, usable document that we can. So got a really strong team. We're growing every day. This is kind of I don't know what kind of moment it is, but we're actually going through an acquisition ourselves. So a lot of these things I'm doing currently, of looking at the target and their financials and asking those questions and trying to do a deep dive and look at the add backs and how that's affecting the loan and everything. So, I feel for you if you're out there going through this process or wanting to go through this process, but find someone you trust, find someone that can really help you, and put your trust in them once you find that person, and they'll be able to go far with you for sure.
Yeah. Yeah. Well, maybe a little inside baseball for everyone. You and I had lunch a little bit ago, and you had mentioned the acquisition, and I have to say, you're probably the calmest buyer in the middle of an acquisition that I've met in a long time. Probably because you get a whole bunch of like accountants and financial folks looking at a firm that has really good financials that's super clean and it's clear. So it makes it a lot less stressful when it's like, okay, I know exactly what I'm looking at. So that's what happens,
It's
right?
easier to buy
Stuff's good.
another It's easier to buy an accounting firm and look at their financials, because you have a better than average chance that their financials are in better shape than most other companies that you're going to look for.
Absolutely. Well, hey, Craig, I appreciate you coming on, and we'll make sure the word gets out of all the great work that you do. Thank you.
Appreciate it, Joe. Have a good one.
You too.